Well, I think the Ukrainian news is most ably represented in the performance of the DAX Index in Germany. Let's remind ourselves that 17% of all Germany's exports go to Russia. Germany is the one country where activity has been hit hardest by the sanctions that are being put on the Russian state. So to the extent that the talks in Ukraine, or talks about Ukraine to be more precise, might produce some concrete and acceptable conclusions, then you would think that it's sensible to see the reaction that we are seeing in German shares. The fact that the DAX has reached record highs over the course of the last few weeks is all down to QE money. $1 trillion of QE money from the ECB is not coincidental to the DAX's rise. But remember just how volatile and how concerned investors were back in the early part of the fourth quarter of last year when the sanctions were first imposed. So anything that suggests that sanctions might be lifted is going to be a positive for European equity markets. More of a positive for Europe than it is for the United States. I think Sweden's move is essentially tokenism. Moving to an official policy rate of minus 10 basis points is not going to occupy the front pages of the business newspapers in the rest of the world tomorrow. And its QE program amounting to 10 billion krona, I think would be best described in lowercase rather than capitals. It's probably the smallest amount of QE that we've seen anywhere. So I don't think it is anything more than tokenism. It does establish the view that they wish to see an easy monetary policy continuing for some time. But if you look at the activity indicators in Sweden, if you look at employment, if you look at GDP, if you look at retail sales, if you look at the housing market, if you were to look at all those without casting an eye on CPI, you'd really have to question why they bothered to do it.